Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, welcome back to a brand new episode of the Smart Property Investment Show. You may have already worked out from this recording that I'm not Phil. Phil unable to do today's episode, but luckily I am in his place. I'm very blessed, Grace Ormsby here, to be able to, talk through some of these property investment journeys that some of our guests do have. It's always really enlightening. I hope that you, our listeners, feel the same about them and keep on tuning in, because we've got some amazing episodes lined up for 2022 already, and I can't wait. Today's episode is going to be, one great way to kick this off. Anthony Crossman, welcome to the show.
Thank you. Thanks, Grace.
Anthony, where are you joining me from? We are still obviously operating via Zoom to comply with COVID-19 safety regulations. So where are you zooming in from?
So I'm currently in my bedroom, so in Leppington. So we live in Leppington. So it's in southwest of Sydney. So that's where we live. Yeah, I'm working from home. So that's the reason I'm at my house here.
It's the way of the world, isn't it? Obviously a lot has changed over the last couple of years. Leppington's a pretty cool spot of the world, isn't it? Yeah. There's a new Western Sydney airport that's being built. So I think it's opening in 2026. So yeah, it's going to get busier soon, I guess. Yeah. I don't want to give away too much of the episode for now, but are you owning or renting where you are now?
No, we are owning this place. Yeah. So this is the first property which we bought. It's me and my wife. So we live here.
So talk us through that purchase then, because I know really in the scheme of things, it was only a couple of years ago that you moved into that place.
Yeah. So we purchased this property as a land. So back in April 2019. So we bought the land for $350,000, which was at that point of time, it was I think, compared to now, it's really, it was really cheap there back then. So it's a 382 square meter land. So it's a big size plot, but it's got a green box at the front. So that's the reason we got the land for a bit cheaper price. And then we built a house with one of the project builders. So, and then we moved in November 2019. So the whole construction and everything costed about $620,000. Which
you would have seen a fair bit of capital growth since then, I'm imagining.
Yeah, that's right. Yeah, at the moment, I think, houses this size are going for about $1 million to 1.1. Yeah.
Absolutely crazy. Was that, what you were expecting when you first bought that property? Were you coming into that with a bit of an investor mindset, or was it just, we actually need a place to live?
Yeah, actually, the thing is, we wanted a place to live, and then we were researching a list of, growing suburbs around Sydney. So based on that, looking at the airport and the number of infrastructure projects that's going in, so we thought Leppington would be one of the best places to buy as a place to live in and for investment as well. So it was a combination of both.
Yeah, cool. It's on a train line, isn't it, Leppington? So
yeah, it's got a train line as well, and the house where we live in it's about 1.8 kilometers to the station, so it's not very far from the station. So that's one of the reasons, because both myself and my wife, we work in the city, so that's the reason now we decided to go ahead with this one.
And how far is it from the city?
It should be about 50 kilometers, I guess. And in terms of the transport, so we take a train and it takes about 55 minutes to 1 hour to reach the city. So
not bad. And especially when you're working from home.
Yeah.
Was that part of the plan too? I know that you are you working in IT software?
Yeah, that's right.
Yeah. So, I mean, does that require you to be in the office, or has it turned into a real work from home kind of job?
Even before COVID hit, so we were asked to work from, as part of my role, so we were asked to take at least, one day work from home. So with the desk situation and everything, because I just changed my role early in 2020. So that was the time when all this started. So it was like, but initially the plan was not like we didn't even know that we would be working from home, but it looked like the right time we moved in. So which was in end of 2019, and then so we had good couple of 2 years to enjoy the house. So yeah, it was not part of the plan, but it looks like it has become what it is now.
Yeah, crazy. Before we jump into sort of what happened next with your property portfolio and that investment journey that you did embark on, can you tell us how many properties you actually have now? Because you did buy that place only in 2019, and I know that you've accumulated a few since then. What's the total number you're at now?
So currently, so we have about 9 properties. So out of which, so 2 of them are land. So the build is going to progress this year. So the total of 9 properties, which includes the house where we live in as well. Yeah.
Which is pretty impressive over a 2.5-year period. This episode will be all about unpacking how you actually achieved that, Anthony. We're going to take a quick break there, but we'll be back soon to talk through that initial subsequent purchase that you bought from your principal place of residence. We'll be back in a second.
Looking for a blue chip Gold Coast investment property, or trying to relocate to the beautiful sunny Gold Coast but keep missing out on the right properties? Maybe you need an expert on the ground to source the right property for you. The Srama Group are the leading recommended buyers agency specific to the Gold Coast, providing their clients with exclusive off-market property opportunities, specific insights into market, combined with a large network of dedicated professionals to ensure you make the right decision without the hassle. Get in touch with us at thesramagroup.com.au and secure your financial freedom today.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Anthony Crossman, Leppington-based. Anthony, just before in this episode, you were talking about that purchase of that owner-occupied property out in Leppington. What then made you decide to go into property investing? Because you've got 9 properties now. This was only 2019 that we're talking that you bought your first one. What encouraged that mindset of, we're going to start a property portfolio?
Yeah, so my wife pushed me to get the first property. So, and then pretty much from there onwards, I didn't know much of this concept about equity and everything when I started with the principal price, what we have. But once I purchased that, and then when we did the revaluation, and when we went for construction of our PPOR, so we met with the builder, and then they were talking about equity and stuff. So then I started researching online what's equity, and because I didn't even know what equity is by then. And then so I came to know that, okay, so once you buy a property, you can just value it again, and then you can pull out equity and use it for the deposit of the next property. So immediately after we moved in, so by early 2020, we revalued our property. And then so we came to know that we got about 100,000 equity in it. So we thought we'll use it for our next deposit for our next property. So that's how it started.
So talk us through that second property purchase then, because I could be wrong here, but that was right on the cusp of the COVID-19 outbreak.
Yeah. Everyone was like, I think, predicting that the market is going to crash and everything. And so initially, but I was always feeling that, there is an opportunity when things are going down. So we saw that, people are selling properties with some good discounts and things. So I was always interested in buying in Brisbane later. So the next property we bought was in Logan. So we got a freestanding house there as well for $260,000. So that was a really good purchase as well, except the fact that we had to spend some money on it after buying it. And then we had some issues with the tenants as well. So, and then the property was actually trashed, and then so we had to spend a lot of money on it. But still, it was a very good investment. So right now, the value of the properties is more than 500,000, I guess.
Okay. So you moved pretty quickly to be getting that land in February 2020, just before COVID hit, and then obviously weren't scared by COVID, and then made that purchase in, was it around May?
So that's in May, yeah. May 2020, we bought the property in Logan. So
yeah. So you were moving quickly, and you didn't even know what equity was a year prior.
Yeah, yeah, that's right.
How did you, what got you into that then? Did you start doing a whole bunch of research online? Were you listening to podcasts? Did you have any friends that were get into the property market? How did it kind of come about?
So I didn't have much friends who were doing this as well, but I did a lot of online research, and then I was watching YouTube podcasts and smart property investment podcasts as well. So those were giving me ideas about how I can proceed ahead. Watching all these investors and their stories. So I was able to go online, do a bit of research, and then I used to spend most of my evenings on realestate.com and then Domain and then SQM research and trying to find out what kind of suburbs I can look and how the properties are selling out and what kind of properties are available on the market. So that's how my research started. And I was really interested in it because I work in IT and I look at data every day. So based on that, it was very interesting for me, and I thought I'll take the next step to buy the next set of properties. Yeah.
Good on you. And I know you talked about your wife pushing you to get that, principal place of residence. Has she played an active part since then in that? In looking at investments as well. So she's as obsessed as you are over property.
She supports me as well. Yeah, definitely. She's been giving me ideas about looking to she always supports whatever whenever I talk about properties, and she's interested as well. So initially we were buying properties in combined names, joint names. So now we have started thinking about doing individual purchases as well because of the land tax thresholds and things like that. So we didn't know how to structure them. So right now we are trying to learn how to structure the properties. And so, it's been a good learning. Yeah.
Yeah, absolutely. And so have you had any help? Have you onboarded any mortgage brokers or buyer's agents, or are you guys doing it all yourselves?
We are doing most of the things ourselves. So for the initial purchase, the house where we live in, so we used a mortgage broker. So, and then because my wife was on a temporary, she was on a bridging visa at that time, and only bank which was offering the loan to both of us was CBA. So after that, we went ahead with NAB for the next set of purchases. So we have a NAB mortgage broker as well. And then, apart from that, but in terms of buyer's agents, we haven't used any buyer's agents as of today. Yeah.
So when you bought that Logan property, could you travel up there to see that?
No, it was all
sight unseen.
Yeah. So except the property where I live, I haven't seen. We both haven't seen any of the properties, any of the other properties. Yeah.
Wow.
Yeah,
good on you.
Yeah, probably the land, because both of the land we purchased are in Sydney, but not any of the other properties.
That's amazing. So 9 properties, you've only really seen not even half of them.
Yeah. No.
Does that make you nervous at all, or you just trust in what you've learned about? And I guess even just the way that the world is now with COVID-19, it has made it so much trickier. Did you see that as a barrier to actually, improving your portfolio if you didn't actually just jump on these opportunities when they arose?
No, I don't think so, because so you have all the tools you need to buy a property online. So it's not necessary that you need to physically be present and inspect the property, but you can probably, so sometimes what I do is I ask some property managers to probably go and have a look as well. So, so most of the times the selling agents, so they have a property management team as well. So I ask them to take a look and see what kind of things that need to be done on the property, and if it is something which is worth going ahead, and they give their feedback as well. So it was not just myself taking a decision, but it's something which we get some ideas from the property managers as well. So that helps with the online purchases.
Do good idea to be going to a property manager. I don't know if this is a question that you've sort of thought of or anything, but, is there a conflict? Have you found if you're talking to property managers from the same place that is selling the property, does that fire any warning bells, or do you think of them as so separate that it's not really an issue? And obviously it depends what other buyers are in the vicinity anyway.
Till date, with all the purchases, we have gone ahead because, so the second property which we bought, so we didn't have we waived off the build and best inspection because there was a bit of competition. So there was multiple offers as well on the property. So to get it going ahead, so I just waived it off. So even if we just have to believe what we see based on what we see. And there is nothing we can do to find out if there is any problems. If there are any problems inside the property. But most of the properties, not most, all of the properties that we have purchased online. So we haven't faced any issues till late. So all the feedback that we have got are genuine, and we haven't got any issues with the properties. Yeah.
Awesome. So before I get to the rest of that portfolio, I am very interested, Anthony, in what your goals have been with property investment. What is the ultimate end goal that property can help you be achieving?
Okay. End goal is so we wanted to have some passive income. So yeah, probably in a couple of years' time, maybe one of us can probably take part-time jobs, and then we can focus more on property investing, or maybe doing something else which we like. So that's something we are looking for.
I think you're on the right track. If you've got 9 properties already, are you going for capital growth? Are you going for high rental yields? There's obviously a few places that you have that's just land. So they aren't really, offering up any passive income at this point in time. What's the strategy? What's kind of going through your head with it all at the moment?
Yeah. So initially I was looking more into, because I didn't know much about the property market. So when I started with my first purchase, so based on my online research, so I found that Logan is something which gives a good rental yield. And then so I was more of chasing all the yields around, trying to find some properties which are cheaper in value and which are undervalued and have good rental yields. So now I'm trying to see if I can add some properties which would have some capital growth prospects as well. But because of COVID, so even these properties which have good yields, they have grown well in value as well. So it's not like you can't achieve a capital growth without an yield, but I have seen that. So even with the good rental yield, so the capital growth is something which is happening together. Yeah.
Which I can see that to all our listeners, they won't know this, but Anthony, you gave me an outline of your properties before the episode, and there's some pretty good capital growth going on there, which is insane. I guess, looking back over the last couple of years, a lot of places around Australia have seen a lot of growth in values over that period. But even, the ones that you bought sort of end of December 2020, they've gone up by so much. Were you expecting to see that kind of overall lift at all? Or was it just kind of what we'll get in now while we can?
Yeah, that's what we were thinking. We just wanted to accumulate as much properties as possible when we can, because so once we have kids and things, so it's the borrowing power is gonna go less. So we try to accumulate as much as possible. So, and we really didn't expect that we will have this amount of growth. And probably it might be a luck as well, because most of these places haven't grown for a couple of years, maybe or for more than 10 years, they haven't grown much. But because COVID hit, and so all the locations have been growing in value. So that's come in favor of us.
Absolutely. So for our listeners, we've gone through the Leppington principal place of residence. We've gone through the land in Southwest Sydney, and we've gone through the Logan property. What was after that? Talk us through the next few property purchases.
Okay. So Leppington, and then so the land we just deposited in January 2020, and then the first purchase in Logan, followed by, so we bought a property in Perth. so which was in Bertram. So it's a suburb called Bertram in the south of Perth. So that property was around the same mid 200s was the purchase price. So this was like, I called an agent, and then he said, I was looking for properties, and then so this agent said there is some property which someone is looking to sell off market, and so he said it's a really good buy because the owner wants to get rid of the property as soon as possible. So if you're interested, so you can make some good money on it. And then I was so I asked him to send the details, and so the numbers worked out, and so we immediately looked into pulling out some equity, and we put the deposit on the property, and that's it. So that was a third, third individual house.
Almost too easy. And so you've had tenants in there since then?
Yeah. I mean, Perth is, as a rental market has been really, really good, and it's very, very tight rental vacancy, and and the rental yield has been really awesome in Perth. I mean, the best among all my properties is the one in Perth, once in Perth. Yeah.
Okay, so there's a few in Perth now, isn't there?
Yeah. So that was the third house, which was in Perth, and after that, so we bought in, again, we came back to Queensland. So we bought in Deception Bay, so which is in the northern suburb of Brisbane. So this was nearly this was in the high 200s. So nearly 300,000 we paid for it. So, I mean, this place is, it's a beachside suburb. So we really thought something which might, if you find, it's very hard to buy something in Sydney in a beachside suburb for such a low price. So I thought maybe it's something which might be a good investment for the future. And really it is. So it's the way it's going in Deception Bay at the moment. So it's really good. I feel like it's a good one.
Yeah.
So it's got a good positive cash flow as well. So with the rental yield, it's really good. So that's the fourth property. And then the next one again in Perth. So this is again in a suburb called Waikiki in Perth. So we purchased this one. This one came off for a very cheap price because I'm not sure. It had probably some minor issues. In terms of cosmetic issues, but it's all. It just I had to spend a couple of thousands to make it back to rentable. So we bought this property for $215,000. And it's got a good rental yield as well.
And all these purchases sound like you haven't put a foot wrong. Has that given you confidence to go, okay, well, we're doing well so far, let's just keep going?
Yeah, that's one thing. So it was it was all going good till early 2021, but then we had some issues with the first investment property, which was in Logan. So the tenant, we had some issues with the tenants, and then there was we had to do a major cleanup and meth decontamination and things like that with the Logan property. So we were out of pocket for about I think 40 to 50,000. So wow. that was the first time we faced some issues with any of the properties, and so from there we thought maybe we have to slow down a bit. But yeah, I mean it's even then. So we got it all up, and then so now it's back on the market, and it's we're renting it out. So it's all going okay for now. Yeah,
It's a shame that you can have tenants that do ruin things like that, but I'm guessing Logan has had so much capital growth that even when it did all go a bit haywire, it was still like, you know what, we'll cop the loss. It sucks, but there's still all the key indicators would still be there.
Yeah, the interesting thing is, I mean, when we had, so the property manager they are one of the national brands, and so they immediately advised us, maybe if you want to sell the property so that you don't have to deal with all this. So they were asking me to probably sell the property at Logan, but I was not interested in selling the property at all, because seeing the market, how it's going, and so we really didn't have any idea of selling the property. So we changed the property manager immediately, and then so we did all the works, carried out all the works, and then so it was back on the market. So So yeah, I mean, so the way, so dealing with the right property, I mean, getting the right property manager for your property is really important. That's something which we understood as well. And having all the insurances, the landlord insurance and everything sorted out, because we didn't have any the landlord insurance for this property. So, so it's all from, it was all going from our pocket. So
yeah. Lessons learned, though, I guess, especially with 9 properties under your belt.
yeah. So now, I mean, we are 100% sure that we need to have all the insurances and everything sorted out. Just to avoid all these things here in the future.
And you said you were going to slow down, but there's still a couple of properties that you've purchased since then.
Yeah. So then, I think in April 2021, so we saw a property in house and land package in Box Hill in Sydney. So that's something we thought probably maybe we might upgrade our PPOR and move in there. So once it's built, so we bought that for so the house and land package was prices around the $1 million mark. So we bought it we signed the contract in June 2021, and then so the land recently settled, and then the build is going to progress this year. So, but I mean, even there, the property prices have risen significantly. So properties that size are selling at the moment for around 1.5 to 1.6, I guess. Yeah. Mm. So that's a significant increase in value. So which gave even more confidence to both of us here.
Absolutely. Wow. So then, and there's still been more even since then. So where are you at this point in time? You've just bought that new place potentially to become your principal place of residence. What's the equity situation like?
So yeah, just after this, we have 2 more properties, which we bought recently 2 months ago in Rockhampton. Both the properties are in Rockhampton. So that's the list of all the properties. And in terms of equity, so I would say we haven't revalued some of our properties, but probably we will be doing maybe in the next couple of months. So based on the estimates and what we can see around, so the total worth would be around, so this is after building the properties on the land as well, so which is in progress at the moment. So around the $5.5 million, the value of the portfolio, and the total loans will be around $3.5 million.
Okay, so you're sitting about 60%.
Yeah,
which is pretty good at this point in time.
Yeah, starting in 2019 and coming here, it's
insane. We're going to take another break there, but after that, I do want to, find out how that 5.5 million is kind of sitting with you, because, are you going to stay aggressive or are you going to calm down for a little while? We'll hear more from Anthony Crossman after the break.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Anthony Crossman. 9 properties. How many of them are land at the moment? So
2 of them are at land.
2 of them.
Yeah.
Okay. So you've got 7 properties, 6 properties bringing in rent.
Yeah.
You're living in 1, and then you've got 2 that are being built on at the moment. So total portfolio value is now sitting at approximately $5.5 million, which, considering you started this portfolio only in 2019, Anthony, pretty impressive achievement. Do you ever look back and go, oh my God, how did we actually do that?
Yeah, I mean, it's really, sometimes maybe we think it's probably a luck, or maybe we've put in a lot of hard work as well. But it's definitely the situation, the COVID situation has a lot to do with that as well, with the property values increasing significantly. Yeah, Yeah, I mean, we look at it sometimes and think, yeah, it's been a very rapid growth. I mean, but not sure if it's going to stay the same way all the time. But yeah.
Yeah. So how do you sort of plan for if things do go a bit more pear-shaped?
So with the current, so we've got a current LVR. So I guess we are trying to keep some buffer as well in our offset account, so to make sure that so if something goes wrong, so we can utilize, and probably maybe if needed, we might have to sell a couple of properties. I think we are okay for that as well.
Mm-hmm.
But provided the moment how the property market is going, so we think that so maybe by end of the year or something, maybe we might think about selling maybe 1 or 2 properties, and then closing off the balance on the PPOR. So maybe that's something which we're still figuring out, but we are not 100% sure what will be the next set of things to do. But we wanted to accumulate 1 or 2 more properties probably this year, and then probably slow down a bit, and then pay off some of the debts, and maybe move into commercial zones, commercial properties in the future. But still deciding on it.
I mean, that is the beauty of a property portfolio, isn't it? That, as your needs change or the situation changes, having that flexibility in there can just provide a bit of certainty and also gives you so many options for down the track. And it sounds like that's the way you want it to be. So, what is that kind of, we talked about the end goal being to build up some passive income for you and your wife. What are the thoughts around how many properties you'll need or want to make that a proper reality?
It's not like, we wanted to have these many number of properties, but we just wanted to go to a place where we can have some cash in hand after, all the paying off the rent, paying off the interest on the mortgages. And but we're still working on it. So at the moment with the bills and everything happening, so still we are out of pocket on a monthly basis. But I think probably by end of the year or early next year, so we should be on the right track to get the passive income, and maybe do some. We even wanted to do some buy some old property and do some renovations. That's on the cards as well, or do some development in the future. So yeah, that's how we've been planning. Yeah.
Is it tough having, being out of pocket each month? Or can you sort of see, is it manageable enough that you go, no, this is what we're working towards? Does it feel like you've had to make a lot of sacrifices to make this aggressive style of investing work, or has it felt quite manageable to you?
Yeah, we had to make some significant sacrifices at the start, but I think slowly we are. So with the other properties which are all positive cash flow, so just these lands which we're building at the moment, so these are the only ones which we have to pay out of our pocket. So it's okay for now. Yeah, but hopefully, sooner we get to the stage where we should be able to. Yeah.
And I have full confidence that you will, Anthony. Thank you so much for your time today and for, sharing so much of your story with us. It's obviously only going to get better from here for you and your wife. You've thought very closely about how this is all going to work, and stay in touch. Let us know when you do buy those next properties, what the next steps are from there, whether you do end up getting rid of some. By all accounts, this year's property market's going to run pretty well after the gains made from 2021. So I think you picked a pretty good time to start investing, Anthony.
Yeah. Thank you very much for inviting me, and I'll definitely stay in touch and keep you guys posted. Yeah.
It's been great to chat with you. To everyone who is listening at home, I hope you did enjoy this episode with Anthony Crossman. If you have any questions for us, or you think that you have a good story like Anthony does that you want to share with our audience, reach out at editor@smartpropertyinvestment.com.au. Until our next episode drops, make sure you're staying up to date with the latest news on the Smart Property Investment website, as well as our Facebook, Twitter, and our LinkedIn. That is all we have time for today, but talk to you all again soon. Stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to refinance your loan for a better rate? Maybe you're considering releasing equity to grow your portfolio or struggling to find a lender that can meet your needs. Finny is the investment finance specialist that has the solution. With access to over 70 lenders, Finny can track down the financing solution you need. We specialize in investment property finance, and we only deal with lenders that have the right solutions for investors just like you. So you're in safe hands. Fast-track your investment strategy today. Visit finny.com.au for more information.